Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I'm the aggressive growth stock strategist here at Zacks Investment Research. And I've got two more stocks for your aggressive growth radar screen. Both of these are tech names, so let's get technical about it, shall we? All right, our first one is UiPath. UiPath, there's the name, and PATH is the ticker symbol. It's a Zacks rank number one that makes it a strong buy. And it has an A for growth and an F for value. And you'll notice for most of my aggressive growth videos that we'll have that for the style scores because that tells me right away I'm on the right path. Value investors and growth investors are inherently looking for different things. So when those scores are completely different, I know I'm on the right path. So, and speaking of path, this stock is one of those that if you did a Google search a little while ago, give me a good AI stock, Google. This is one of those early names that you got. But as we can take a look just from this chart right here, we can see that all these AI names came up and then they've all come back down. A lot of them have come back down, I should say. Not all. So some of them are still up. So let's go into why this is a good aggressive growth stock. So let's take a look at all the metrics we usually normally look at. And we start off with the earnings history. Are they beating the number? Big beat, beat, and beat. So we like this that in kind of an absolute sense, these numbers are moving higher from 11 cents to 22 cents, right? So that's good to see. But the problem here is that the incremental size of the beat isn't really growing as well, and we're getting smaller percentages. So some of the air might be coming out of the bag there. But it's always good to see that they are earning money. Now let's take a look at the estimates. The estimates will tell us what's been going on. We see an increase from 10 cents to 11 cents for this quarter. Next quarter, 9 cents to 10 cents, another penny. But boy, the back half of the year is going to be something because 49 to 57 is a lot more than just those couple pennies right there. And next year, which fiscal year is a long way off, it's up a penny. Not much, but that's a long ways. Plenty of time for analysts to move those numbers higher. Let's go ahead and take a look at our growth profile. We can see for this year, we're looking at 15% top line growth. Next year, 17%. We like to see that growth acceleration. Good signs all around here for path. All right, let's take a look at the valuation. Got it way up at the tippity top of the screen. All right, you're paying 38 times earnings, which is a decent amount. But remember, we had a very good quarter most recently with 31% top line growth, even when this year's only expected 15%. So could that number be a little light? Maybe. I don't know. Price to book is 6 times. The value investors hate to see that. This is an asset slim company, so you're going to expect a little higher price to book there. Price to sales at 9.6 times. That is a healthy amount too. Operating margins headed in the right direction, but negative. So losing 12% to losing 9% to now only 5%. So I'm going to tell you that I like what I see so far from Path. Now, let's take a look at the price and consensus chart. 2022, this stock wasn't public during the pandemic when everyone was going to die right around there. Then everything came back and this stock IPO'd and promptly returned down to a $10 stock, just like that. But we can see all these green arrows mean they've been beating the number. They consistently beat the number. We like to see that because that means management is able to communicate properly to Wall Street. And this company just hasn't been given any appreciation really for the movement in these earnings estimates. These earnings estimates lines are going nice 45-degree angles there, but the stock is hanging back. So at some point, this stock is probably going to break out and probably move a lot higher. So that's why I'm putting it on your aggressive growth radar screen. So it's UiPath, PATH is the ticker, and it's involved in that AI stuff and plenty of other technology services. Okay, let's go to our next one. And again, I promised a tech name, and you got one. It's MSA Safety Incorporated. MSA is the ticker. Pretty big price tag on that. I know it's going to scare a lot of retail investors because they don't like that big price tag. But it is a Zacks rank number one strong buy. A for growth, F for value, just what I like to see. And this chart looks pretty good. Nice 45-degree angle there, moving up. But this is a cybersecurity type thing, right? They develop testings, all sorts of great security type things, MSA security, right? Okay, so are they beating the number? You're beating the number. You're beating the number. You're beating the number. Barely beating the number. So our beats were in the 30-cent range, and then last quarter down to just 17 cents. Still beating the number. Still good. Of course, not perfect. Very few things are perfect, other than my puppy boy, my dog. He's a perfect little boy. All right. Estimates moving up $1.42 to $1.53. Just up a nickel for next quarter, $1.94 to $1.99. For the full year, $7.41, up to $7.73. And next year, $7.91 to $8.49. Those are good moves higher. Everybody's moving higher. Are you growing? You are growing at a small rate, we'll say 5%, but that's on a big base of $1.88 billion compared to a couple hundred million for the other company. And we're looking at, again, 5%, so pretty sticky consumer base there, and then up to $2 billion in sales next year. So no acceleration of revenue, but we're seeing consistent earnings and decent growth. Decent growth, we'll say. All right, so 24 times our forward earnings is a lot, especially when you're only growing, double digits in the last quarter of the year. That's good to see. Price to book at 7.8 times, price to sales at 4.2 times. Pretty decent size. Operating margins are going to be right in this ballpark, and they're just going to hang out there. There's no real impetus for them to move them that much higher. But for the most part, we see these security companies as being very stable, and you have to end up paying for that stability. So let's take a look at the chart that we always tend to look at. Let me put this more in the middle. And we can talk about the pandemic. We're all going to die, and we're all safe. We're coming back. Then we have the tech wreck of 2022. And then 2023 was pretty good for this stock, and 2024 is starting off pretty good. So that's how we look at the stock price. Now we think about the earnings. This is a flatline year. This year is up and then down and around, but we're starting to see that good trajectory. So this line's moving up. This line's starting to move up in that way, in that respect. And we're starting to see some good distance between those. So that implies good earnings growth. All right, so it's MSA Incorporated. It's MSA Safety Incorporated, Security and Safety Services, and of course, Path. All right, well, that's it for this week. Be sure to join me next week when I take a look at 2 more stocks to go on your aggressive growth radar screen. And until next week, when you come to see that video, which I know you're all eagerly awaiting, why don't you go to Zacks.com/promo to check out all of our latest promotions.